Hello and good morning from Europe. It's Monday, April 20, and we'll be with you with the short market update. We are starting an amazing week. We're going to check the markets, news, updates, and latest data, what's happening here, and what will be, and what's our expectation for the week ahead. But uh, before starting in the week ahead, which is going to be the week 17 of 2026, before going to start the week ahead, I have to mention some points, some very important points from the previous week, and then we will check the geopolitical updates on the latest situation in Iran war, Persian Gulf, and the Strait of Hormuz, and then we can go forward and check week ahead. Because if we don't know what's going on right now in the market, we cannot expect about the week ahead as well. So, previous week, we didn't have much economic data important, important economic data in the calendar. Still, we had many of them. We will talk about them. But the main market driver was the war, geopolitical tensions, and that's why we could see the market last week increase amazingly. Most of the U.S. main stocks and main indices they closed on a weekly basis. They closed much higher than expected. We had records for the Nasdaq and S&P 500 last week. Nasdaq closed 6.8% higher. S&P 500 closed 4.5% higher, and Dow Jones gained by 3.2%. Those numbers shows how positive week we had. The oil price fell for some minutes, for some hours, even fell under $80 to 70. Some even thought that then it can increase to above $80, and now again with the week ahead at the beginning of the week I will talk about the prices, what's happened with the oil price and what's our expectation. But the market risk also at the same time, the risk in the market with the VIX showing the market risk, and the situation in the market VIX fell under 18 last week for some hours, but again the geopolitical risk increased. So these changes made the to US dollar index to lose the weight, but for the second week in a row, and the gold supported the gold and silver prices to gain further. But looking at the market, the economic calendar, before going to forward, I will talk about the geopolitical updates, what's going on right now, and like 3 days before the ceasefire that can be in between Islamic Republic based in Iran and United States. Let's before talking about that, I have to mention about the some economic data. We started with the U.S. existing home sales missing expectation falling by 3.6% at the March, showing some weakness in the housing market as again rates are slightly higher compared with the 2 3 weeks. We know that the rates fell under 6.2%, but now again the rates around 6.4 6.5%, and after 3 weeks positive and higher demand and more demand for the mortgage in the United States. Again, in the last 2 weeks, we can see these numbers are falling. In China, on Tuesday, we saw the imports increased rapidly by 27.8%, showing if that was for the March, showing that the Chinese demand finally, the domestic demand is finally giving some, the domestic demand is finally giving some positive signs. Finally, we can see that Chinese people started to gaining to earning more. And then in Spain, we had inflation numbers increasing by 2.4%, showing that the effect of the war and the geopolitical tensions and higher energy prices. Also, yet last week, I'm talking about the energy, I shouldn't forget to mention about the monthly report that we had from OPEC and IEA. Both of them, we had a monthly. The week before that, we had the EIA short-term energy outlook. We talked about that before, so I'm not going to repeat that. But last week we had IEA and OPEC monthly reports, both of them expecting shortage in the physical market, despite the just like while in a paper market we don't have this, but in physical market we really have the shortage with more than 7 million bottles out of the market right now. We know that, right, because of the closing and lockage that we had in blockade that we had in the Strait of Hormuz, and also because of the war that was going on in the Persian around the Persian Gulf, more than 7 million barrels it's out from the market. And now both OPEC and IEA expecting lower exports from these countries. That's why both supply and demand, actually they lowered both supply and demand numbers that they had. Anyhow, so that's what what's interesting, that now the middle price or average price for the oil, OPEC oil, is increased to $91. That was around 54, 55, $56 in a recent months before the war starts. But now for 2026, the average price is increased to $91. That's one of the surprises that we had, and what we're expecting to see, I mean, the what market expecting to see. In United States, we had a PPI number last week. While in the week ahead, we have many inflation numbers and PMI numbers. Last week, the US PPI, Producer Price Index, didn't show much effect of the war yet, but if the war continues with the situation that is going on, we can expect these numbers at higher levels as well. Um, Continuing that, we had API and EIA weekly report as well, but with the higher increasing, with the higher numbers are increasing in the private sector, but for the oil inventories. But when you are looking at the I mean, EIA weekly report, it says that oil inventories fell, while API report shows increasing the inventories. Another market mover last week was on a Thursday. Both China and United States, they had amazing numbers. But before that, we had surprising numbers from, not surprising numbers actually, but we had employment market data from the from Australia, where we saw the unemployment rate stayed unchanged at 4.3%. What about the China? The Chinese GDP was surprised 5% for the first quarter GDP growth. It was amazing. But what made us to be a little bit more cautious about the China, it was unemployment rate increasing to 5.4% from previous 5.3%. At the same time, industrial production, which was increasing by 6.3%, 6.2%, 6.1% for the first quarter. I mean, the market expectations. Um, and like year to date, that's increased by 6.1% for year to date, and increased by 5.7% for the March. That was a little bit annoying number, which says that the GDP is fine, but industrial production is not going that much. If we look at the result, we can understand the main reason was the service sector. The Chinese service sector in the first quarter increased much better than industrial and manufacturing sector, mostly because of the Chinese New Year holiday that we had. That increased more troubles. And that service sector jumped very rapidly compared with the December, the first quarter of 2025. That's why we could see the GDP grow amazingly by 5%, while industrial production and manufacturing production was not that good, and also could see amazingly in-person amazing numbers around 28% increasingly in-person. That was the main reason. But still, unemployment rate should not be forgotten. While in other data we had house price index falling by more than 3% in the first quarter. That was also another number that from the China, about the China, we should be worried about that. In United Kingdom, GDP increased by 0.5% in February. But looking at the manufacturing production and industrial production, again, we have very weak numbers. And in the week ahead, we will have the inflation numbers, and we are expecting to see the inflation higher than expected. With the weaker industrial production and industrial and manufacturing production, now we have this GDP numbers, weak GDP numbers as well. But at the same time, inflation also increasing. GDP is not fine. Industrial production, manufacturing production negative. All of them, they're creating a very mixed situation for policymakers in Bank of England to make a decision whether they hold the rates or increase the rates or cut the rates. That's the main question. But with this situation, with the higher inflation and expected inflation, if the war continues until the next BOE meeting, that all depend on the war situation, especially if war continues and the higher energy prices continues for longer, we can expect the Bank of England to hold the current rate at 3.75%, not rate hike. And even maybe they are top whispers about that rate hike as well. Uh, PPI in Switzerland increased finally by 0.2% after 2 months of falling down. That actually, for the Switzerland and China, they were the countries that somehow they got profit, or they could take advantage of this higher inflation because they really had a very negative inflation for the negative inflation data in recent months, and now we can see with these inflation numbers they can take advantage of it. Inflation in Eurozone also increased by 2.6% last month in March, compared with 2.5% expectation, but much higher than 1.9% that we saw in February. Thursday, we had amazing numbers from US labor market data, with initial claims increasing only 207,000, much lower than previous week or much lower than expectations. While the 4-week average also is down around 209,000. That says that the U.S. labor market is still positive. But industrial production fell by 0.5% in March, and that was one of the negative news and disappointing numbers that we had previous week. And finally, the week ended with the lower just like Baker Hughes rig counts. That's one, the total and oil record, each of them fell by one unit, and that was one of the negative news that we had, especially in the energy market last week. This week started with the Chinese Central Bank meeting. PBOC held the rates at 3% for 1 year and 3.5% for 5 years loan prime rates. That says that the Chinese Central Bank is still negative for the that's if I don't mistake, it's a 11 months right now, this Chinese Central Bank or People Bank of China holding the current rates, and inflation in producer price inflation in Germany increased by 2.5% after falling by 0.5% last week. Last month. Later today, I'll be talking about the geopolitical risk. Let me finish with the economic data, then I will talk about the geopolitical risk with this economic data, what we can expect from the market. Later today, we're gonna have the inflation numbers from Canada, where we are expecting again, same as other economies, to see inflation increasing by 1.1%. Same thing that happened in the United States, almost in the Eurozone as well. And tomorrow, we're gonna have the inflation numbers from New Zealand. There also, we are expecting to see the higher numbers, while unemployment rate in the United Kingdom is expected to stay unchanged at 5.2%, but labor market should give us a weaker signal with the lower employment, with the lower earnings, average earnings. That can tell us that UK labor market is still weakening, but that cannot support the lower inflation, as the inflation is getting increasing with the other reasons and with the other measures. In Eurozone and in Germany, we're going to have the ZEW surveys about the economic sentiment and economic current condition. Both of them is expected to see in a weaker level until that the UK, Eurozone and Germany's economic expectations and the current situation is falling down deeper and increasing the concerns that we had about the Eurozone economies that we have. Tuesday will be a very important day for the financial markets, especially for the Wall Street and the US markets, US dollar, and Wall Street generally, because we're gonna have the Kevin Warsh nomination statement and hearing in Senate, and now the Senate should decide about the Kevin Warsh, whether they accept or not. More than 90% chance there is that they will not have any problem with the Kevin Warsh expectation in the Senate, as Democrats also, they like him. He is the person that is gotten invited by the Republicans, as the president is a Republican, and as I understood, the Democrats also like him, as they believe he is the best choice right now, very independent person, and the person that can be trusted as the who is not bringing the politic to the economy, as will hold the Federal Reserve independence from the governments. That's why most probably we will not have any problem, but still the market will be very cautiously look at his comments about the economic condition, his policies, expected policies. That I mean, this hearing will tell us what exactly we should expect. Not exactly, but what we can generally expect from his point of views and his ideas about the policies and economic data, economic condition. That will be very important. However, we will have the retail sales, sorry, we will have the retail sales numbers from United States as well. The retail sales is very important number usually because that tells us what exactly is going on in the economy. You know, when you have uh, higher numbers in when you have higher numbers in a retail sales, it tells you that okay, this economy is this in this economy we have more people that they are spending the money, or if we have the weaker number for the retail sales, this is okay, these people are not willing to spend the money. So that can tell us how the people and how the consumers are feeling about the economy, how those peoples are feeling about the generally about the economic condition and their expectation for the futures. That's why, just like to understand the bigger picture, I mean, the retail sales always giving us the bigger picture of the economic condition and expectation. That's why the retail sales number is very important. We are expecting to see very positive numbers of 1.4% growth for the March, and that will be very, very important to be watched closely. On Wednesday, we will have the inflation numbers from United Kingdom. We will have both CPI and PPI, and we are expecting to see the higher numbers, especially for the PPI is expected to increase by 2.8% on a monthly basis. CPI also is increased, supposed to increase by more than 1% on the monthly basis. That tells us a lot. That tells us a lot that how this energy price is affecting the European economies, especially UK and Eurozone generally. In Turkey, we will have the central bank meeting, CBRT, expected to hold the rates. However, there are some whispers about probably increasing the rates by 1%. Let's see what's going to happen. Right now, the central bank interest rates is 37% in Turkey. That's harshing that's very, I mean, kind of I can say this this higher rates for a long time that Turkey had weakened the Turkish economy very rapidly, and they should be very careful about that. But still, with the higher inflation that we have right now in Turkey, with the higher interest rate that we have across the world, with the higher energy prices, there are the whispers that maybe Turkish central bank also goes for 25 for 2%. There is no 25% of like 20% or 50 basis point. There's about 5%, 2%, 3%, 1%. There are some whispers talking about between a 1 and 2% rate hike. So let's wait and see what's going to happen on Wednesday. Thursday again, we're going to have very important numbers. As Thursdays we have the U.S. labor market data with initial and continuing claims, but this Thursday, we're gonna have the PMI numbers as well from the most of the economies. We're gonna have these PMI numbers for both service and manufacturing production. Two things very important. First, those numbers are the primary number for the April. The second, for United States, we're expecting to see the higher numbers, while for other economies, we're expecting to see all of them to be weaker than previous months. Those numbers are for the March, for April, and we're expecting weaker number compared with the March. Then third, what we should be very careful look at that. If you see the numbers are green in the economic calendar the next days, it doesn't mean that those services, I mean, those service or manufacturing sectors condition increase compared with the previous month. It means it may better than expected, but still that can be weaker than previous month. Unless if you make sure those numbers that you're gonna have in actual will be much more than the previous number. But but having the green numbers in actual, it doesn't mean that they are better than previous month. At the first level, it means that they are better than expectations. But still they can be weaker. I mean, if you see that the reason that I'm telling that, even if you see some positive numbers in economic calendar as a great number, but still if you see the negative reaction in the financial market, it's because of that the markets weaken just less than expected, but still it's a weakening. So that's why the market, despite being a weak great numbers here, you can have the negative reaction in the financial market and stocks and stocks and generally the other markets. Looking at the Friday, we can see the Japanese inflation numbers at the very first stage, which will be again should be actually again watched very closely. For the Japan, also we're expecting to see the higher numbers. The national inflation should increase by around 0.5% after falling by 0.2% in February. And Reuters says in United Kingdom will be the other number that we should be watched that very closely, and the same numbers for Canada. This is just generally what we're expecting for the week ahead and what we had in the previous week. But then looking at the market right now, and also about the earnings report, I shouldn't forget about the earnings. What about the earnings? Last week we had an amazing week. In the week ahead also, the last week it was the banking weeks, mostly the banks. They had a report, and we had amazing reports in the banking, in the financial sector. In a week ahead also, we're going to have the very important numbers in earnings calendar. Don't forget to watch them very carefully and closely. While I have to say that the market risk after closing under 20 last week. The week started with more than 21. Looking at the chart, telling that the market risk again is around between 20 and 21, is higher, and telling us that the risk is increasing, while the dollar index, which fell under 98 last week, started the week again above 99, between 99 and 98 and 99. The market very closely looking at this geopolitical tensions and wars. Let's see how going to deal that. If we have the higher tensions, it means that the US dollar index also should increase. Otherwise, it can be fall further. In commodities market, silver price after increasing to $83 last week, now it's trading around $79, $80, but still, just like in the bigger picture, still is a positive. Same we can say for the for the gold as well. The gold price is trading around 4,780, while it was around, just like last week, it fell out even towards 4,200 in the last weeks actually, but still again higher as the geopolitical risk is high. WTI and energy prices, after WTI falling under $80 last week, now we can see this WTI around $87, and the market is increasing and telling us that higher energy can that higher energy prices still can continue because of the geopolitical risk that we have here. And now the Brent oil also trading around $95. About the stock market, I have to say that still while the week last week closed with the very new record high and amazing numbers with the record high, the week started with the cautious condition in the market, as we can see here, with the very cautious condition, as we can tell that, while the higher rates can continue further, if the geopolitical risk still stay here in the markets and in our outlook, if the war continues, all this depend on the war condition. Because if you have the war continue here, it means that the oil and energy prices can be higher, and higher oil and energy prices means that the higher inflation means that the higher rates for longer. That's the situation, I mean, that tells us the situation and general the condition that we have in the market. We have very higher risk, and so this higher risk rapidly and very directly can affect the markets. That's why we should be very careful about the market condition and geopolitical risk that's coming on. That's why we could see the financial market, which closed higher last week, started this week with the more cautious. But the geopolitical condition, I have to say that in next 72 hours, in next 72 hours, probably this ceasefire between United States and Iran will finish. And if we have any progress in the talks that they have, the negotiations that they have, indirectly with the support of with the help of the Pakistan again. If these negotiations continues positively in they can agree in some points, the market risk can fall down. But if the negotiations doesn't go well, we will have the higher risk again in the market, and again that can affect the market. So all the market condition, yes, we have economic data, very important economic data, we have very important earnings here, but still the market mostly more than 80% reaction of the financial market right now is the react that they are having to the geopolitical risk here in the market. So before opening or closing any position, go forward and check the geopolitical risk here. We know that currently, in last night, the Americans they stopped one Iranian big ship oil. Probably it was the oil cargo ship, and we know that the Iranian they closed the Strait of Hormuz again after they opened it for less than 24 hours. They say that the Americans are still continuing the blockade that we have, and this as long as that continues, we can close the Strait of Hormuz. And we know that the Strait of Hormuz being the close more than ever before than anything else is affecting the Iranian economy itself, because more than $500 million they will lose with the blocking the Strait of Hormuz. They cannot have any exports. So Americans are not losing much in blocking the Strait of Hormuz, blocking the generally blocking the Persian Gulf here. And who is losing there? The Iranian losing there, the Chinese, Japanese, and Europeans. So they should come over and take control of it, and that's what the Americans wants to see. So whether the Iranian close the Strait of Hormuz, whether the American close it, in both side, in both situation, the winner is American and U.S. economies. That's what's happening there. And so let's see and wait. So that's why I'm telling that the Americans, they are not inherent to reopen the Strait of Hormuz, because if it continues further, the negative effect of the Strait of Hormuz directly will go to Iranian economy, directly will go to the European economy, Chinese and Japanese. So Americans, I'm not telling that the American economy will not be affected by that. Yes, it will, but not as much as Iranian economy is getting affected by that, or European economy is getting affected by that. So that's something that the killing itself more than killing your enemy if the Iranian continues to close the Strait of Hormuz. That's why Americans are not inherent to open it. This is the situation is going on for the cryptocurrency market. Also the same. While the Bitcoin increased more than $77,000 in recent days, but again now we can see the cryptocurrencies market is down. The Bitcoin trading around $75,000. Last week it increased around $78,000 as well. But as same as the stock market, same as other risky assets, the cryptocurrency market also is affected by the higher risk again in the markets. And we are expecting to see the cautious market continuing in the week ahead. That's what happened last week, what happened today, and what we are expecting to see in the next days. Hope it was useful for you. Talk to you again tomorrow. Have a good day. Bye-bye.